Hey everyone, welcome to Channel MS channel. Today's video, we're going to look at a very simple strategy as to how to find when a stock has made a bottom and what is the point that when you buy a stock, it can start already moving upward, or at least what's the point when you buy a stock, there's a higher probability of that stock not again heading lower, but rather it heads higher. That's what we're going to focus in this video. Last week, I also discussed three setups: how to find tops in a stock, or how to find points of reversal so that you can sell and exit a stock at the right time. Okay, so let's get started. I have three setups today, starting with failure swing setup. Now, failure swing setup is similar to the setup that I discussed last week, but this is the other way around. How to find a stock after it's made a bottom, what is the point you have to buy, right? When is the buy signal generated? So the first rule is the stock has to be in a downtrend. Now, we want to find point of reversal, so which means the stock has to be in a downtrend, and then the stock has to make a low point, and then the stock has to rise, and then stock has to fall, but this low point should be higher than the previous low point. Now remember, the rule for an uptrend to begin is a higher high and a higher low, right? So we had a higher high, but we also need a higher low, and then this pattern needs to start forming, right? So we had a high point. So this was the previous high. Then we kind of made a low from there. Now this point here is the lower high compared to this point, right? And then the stock came down, then again it reversed. So this now becomes a higher low. So we have a lowest low, and then we have a higher low. And now once this breaks, now we have a higher high because we have crossed the previous high point. So now we have a higher high at this point, and we have a higher low. So which means an uptrend is set to start forming, right? Now that's when you buy the stock, when we have a crossing or a closing. If you're a conservative trader, then you probably buy it when a stock closes above this point, right? Now that's a very simple basic setup, which is the failure swing buy signal, right? Not the sell signal. Sell signal is the other we discussed. So here again, the basic rule is higher high, higher low. Once that is formed, here at this point is when we have a higher high and a higher low. So that's when you buy the stock. Now this is a very simple setup when a stock keeps going down and then it starts going higher, right? Now the next setup that we're going to discuss is a non-failure swing. Slightly complicated compared to the previous setup, but again it's pretty simple if you understand the concept of higher high and higher low, right? Now remember, again we had a high point, then we had a lower high, then again we had a low point, we had a lower low, which means the stock is in a downtrend, right? So it's going like this, it's going down. Now we need a higher high, higher low pattern. So which means the stock first has to cross this previous lower high here, right? So the stock goes all the way up here without taking any pause anywhere, just goes all the way up, making a higher high. But now we need a higher low, which means the stock has to come back again, right? And has to make a higher low. And this higher low, once it's made, then the stock has to again cross this previous higher high to generate a buy signal, because at that point is when we have a higher low. Now let's assume that the stock goes all the way, makes a higher high, but all the way crashes again down, right? If it crashes all the way down, then we do not have a higher low. And that's the reason why you have to have a higher low, and the stock has to cross the previous point for a signal to be generated. Now, this is a current example of Shraddha crop. So we had a higher high. We now have probably a higher low. That will be confirmed only when we cross this high, right? So at this point, when it crosses this point here, and when we have a closing over this point, is when you buy the stock for a long trade, right? Or even positional trade, swing trade, whatever it is, you buy the stock at this point when it crosses this point, when it closes the closing. So that's the second setup. Again, the rule is simple: high, high, low. That's all you have to look at. Once we have that setup done, then the buy signal is generated. The last is the most easiest of all three, which is the double bottom setup. Now it's very simple. All you need is a W pattern like this. A W pattern means you have two similar lows, right? Now here, this is a case of Dow Jones, so it works in all kinds of markets. Doesn't work only in Indian markets or any few stocks. Patterns work across all markets, all time frames. So you have to just be able to spot it, right? So here we have two similar lows, and then the stock price has to cross this swing high that we have. So basically, we need to form a W, right? Now, when we cross a swing high and when we have two similar lows, then we have a buy signal. Okay, it's similar to the failure swing. In failure swing, it's just that the low is higher. It's a higher low here, so the low would be cut somewhere here. But in this case, the low is almost the same level, and then we cross the swing high, and then we make a new buy high, and that's when we say we have a buy signal. So these are three setups to buy a stock after it has made a bottom. It can be applied to any time frame: daily, weekly, monthly, hourly, 5 minutes, any time frame, any market. These setups can be applied, and you can make a trade out of it. That's all for today. I'll leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye bye.